Exxon Mobil topping profit estimates for the fourth quarter. The company saying that it achieved record production in the Permian Basin and Guyana. And joining us right now in an exclusive interview is Exxon Mobil's chairman and CEO, Darren Woods. Darren, thank you for being with us this morning. We were looking at the stock earlier and just kind of keeping track of it. I think it's around flat right now, although I haven't seen it in the last couple of minutes. On an adjusted basis, you came in with earnings that were $1.67 versus the $1.56 the street was expected. And you warned just earlier this month. Oh, OK, it looks like it's up by about 0.6% right now. You warned earlier this month that you were going to see lower oil refining profits and weaknesses across all businesses. But you came in with better than the street was expecting on this. So what happened, I would say, in the last in the numbers that you put together? What's happening now in the beginning of this quarter?
Yeah, good morning, Becky. It's good to see you again. I think that the information that we put out at the beginning of the quarter is generally focused on what the markets are doing. One of the things that we've observed over the years is the analysts have a really hard time understanding the market effects on the industry and the business. And so what we put out in the 8K is the impact of prices and margins on the industry as a whole. Our actual performance rests and sits above that market movement. So as crude prices come down, we'd expect the industry revenues to go down and to profits to go down. And then everything that goes above that is the hard work the organization is putting in. And so we tend to separate out what the market's doing versus what the company's doing. And if you look at the beat in the fourth quarter, it's a function of what the company's done in terms of growing its volume and improving the high-value product mix of the things we're making in our product solutions business. I think if you step back and look more broadly at the year, $34 billion in earnings, $55 billion in cash flow from operations. It's our third best in a decade. Really reflects the really hard work that our organization has been putting into making this business better. Very pleased with that effort, very proud of our folks. Also very pleased that the street is recognizing the transformation that we brought about in the company in terms of driving shareholder returns, where we, again, lead all of our competition. And I think the final point to make is the foundation that we've laid in this corporation and the plans that we took the analyst community through in December through 2030. We have a very strong foundation of investment opportunities. Our intent is to grow earnings by an additional $20 billion by 2030, grow cash flow by an additional $30 billion on a constant price and margin basis. So I think the business is in very good position. The fourth quarter results show that, as do the full year results.
Darren, that discipline you talk about has been rewarded by the street. It's certainly what shareholders would like to see. It may not necessarily meet up with what the current administration, with what President Trump has said he would like to see, which is expansion of production. Are you going to put a lot more CapEx to work doing that? And can you do it more efficiently?
So I think actually what the company's been doing is very much in line with what President Trump's objective, which is to drive energy security for the nation. If you look at what we're doing in the Permian, our U.S. business, we're doubling the production through 2030. We're growing our production in the Permian faster than any other company. And if you look more globally, we're growing our business. In fact, this year we had the highest liquids, or crude production, that the company's had in the last 40 years. And we're investing in new products. We're investing in lower emission solutions for the economy. And so if you look at the money that we're spending, which next year we expect to, or this year 2025 versus 2024, our capital spending will be up. And so I think if you look at what we're trying to do, this business, you invest today for growth into the future. You invest cash today for cash tomorrow. That's a really important focus. I think in a depletion business, when you start cutting CapEx, you basically start compromising the future growth of the business. We're not going to do that. We've got a very, very good portfolio. In fact, I would say an industry-leading portfolio of investment opportunities. And we're executing those with a lot of efficiency and drive.
I will go back to cutting CapEx, your comments on that, only because we spoke earlier with Mike Wirth from Chevron. They are cutting their CapEx for the first time, I think, since the pandemic this next year. You don't want to do that because you think it's short-sighted?
If we're in a depletion business where every day you produce a barrel, that's a barrel less you have into the future. You've got to constantly be filling the pipeline with advantaged, attractive investments. The industry as a whole, and I think the street, investors tend to talk about capital discipline in respect to reducing absolute investments. We think that is a really bad idea. Capital discipline is making sure that every dollar you spend effectively. You invest it in advantage projects that deliver high returns. And if you look at our portfolio, that's exactly what we're doing. So measuring discipline on an absolute CapEx level, we think, is a fool's game. What you ought to be focused on is, are you spending your money in the right places to grow business? Our business is growing across our portfolio, not only in our established businesses, not only in the oil and gas businesses that we're in today, but in our new businesses where we are growing our carbon capture and storage business. We're looking at a lithium business. We've got plans for low carbon hydrogen. We're also introducing brand new products where we're taking gasoline molecules and turning those into a resin that we can use to replace steel rebar and other materials used throughout construction. Huge market opportunity there. We're actually taking the bottom of the barrel carbon-intense feedstock, manipulating the structure of those carbon molecules, and growing a business for battery anodes, which will increase the battery durations by 30%, longer lives, longer voyages. So we're looking at a broad portfolio of how we use our capabilities to make products that are advantaged versus the alternatives today and meet society's needs, whether it's in the energy sector or whether it's in the material sector or whether it's in the lower emission sector.